What's going on, everybody? You know, a lot of people ask me in my comments, how do I think Yieldmax funds will perform during a down market cycle? And what will they look like when the stock market recovers? We just have to look at numbers. We have some data, particularly on Tasley, and we have a little bit on YMax and YMag and Amsy to look how they perform during a down market cycle, and then during an up market cycle during the recovery phase. This will give us a grasp on what's going to happen, you know, if we get a correction or a prolonged down period. So without further ado, let's get into it. So we're going to look here at Tasley because this was the down cycle that I have shaded here. Tasley came online on November 22nd November of 2022. So it didn't really hit this down cycle until this portion of the shaded area. That lasted a good 8 months. I think that's a decent correction, and that's a good amount of time to see how it would perform during a down market cycle. And then we'll look at the recovery phase. We are going to look at this down cycle for the Qs, which we're going to look at YMax and YMag. You can see this shaded area here. That's the biggest because the markets have been on such a rip. It's really hard to find data as to how these funds would perform during a down market cycle. So I just took the biggest dip that we could find in the Qs. And then we're going to look at Amazon. We're going to look at an Amsy, and you see this portion of the shaded in area of Amazon. We're going to look how Amsy performed during that period in comparison to Amazon, and then of course the recovery phase. So let's begin here. So you can see here July 3rd of 2023 is when that down cycle started for Tesla, and then it ended basically 3/08/2024. And you can see that here in the chart. You can see them both going down there. Now in total returns, you could see that Tasley, whether you kept all the dividends down below, right, in total return, or reinvested them all, either way, it outperformed Tesla on the way down. And that's kind of, I think, what we should expect for the most part, that Yieldmax funds will perform better than their underlyings on the way down. And that's pretty nice, right? Because during a corrective measure, everything's going to go down pretty much. I mean, maybe some penny stocks or something will go the opposite way. But by and large, when the markets are going down, everything is going down with it. So during this long, 8 months or whatever, Tasley outperformed Tesla in total returns. So I think that's really nice, right? But let's go look at the recovery phase. And this is where something really lacked with Tasley. You could probably guess by looking at this chart, calls were blown through from Tasley right and left, right? Because when Tesla starts moving to the upside or to the downside, it is a freight train, and it just blows through calls to the upside. So if we look at here, if you returned all the dividends, that's a massive difference, right? 43% return for Tasley versus Tesla's 92. If you decided to keep all the dividends and not reinvest them, Tasley, you're up 34%, while Tesla up 92%. So, yeah, we'd like to see something better on the recovery phase, but welcome to covered call investing, my friends, right? And this is what it looks like when calls get blown through. 33% is a decent recovery. What do we have here? Total return 43% and 34%. It's not a bad recovery at all, but it's not to the level of Tesla. So it performed better going down. On the upside, it did not perform as well. Okay, let's go look at, now we only had about a month's worth of downtime, even less than that, about 3 weeks of that pullback. Let me go back here. Of the cues that I showed you here, right? This area here, it was our deepest pullback. So that's the data we have to use, and that's all we have, unfortunately, to tell how these will do going down. And YMag versus the Qs, and I just did the Qs for an easy comparison for YMax and YMag. I know it's not apples to apples, but it's still the market, and I still think it's a fine comparison. So on the way down, you could see slightly, if you put all the dividends back in, YMag slightly underperformed the Qs. And on total return, if you kept all the dividends, it underperformed it by a little bit more for that 3-week period. But guys, that's all the data we have because the market has been ripping for 2 years. So we had to select the biggest pullback we could find. So, but it's not far off. And I would say if given more time, YMag would have outperformed the Qs. It just didn't pull back deep enough. Now let's look at the recovery phase. Actually, let's look at YMax first going down. So YMax going down, if you reinvested all the dividends, actually, just right there with the Qs on the way down. And then if you kept all the dividends, again, I mean, they are neck and neck on the way down. Hard to, again, I think with given more time, we'd have seen more separation. So let's say there was a 3 or 4 month pullback. I think you would see YMax and YMag both outperforming the Qs on the way down. But what about the recovery phase? Well, let's start with YMag. So you can see the recovery phase there started August 6th and went up until Friday. Let's just say for the recovery phase. And if you reinvested all the dividends in YMag, you're down about 2.5% versus the Qs. Not horrible. And then if you kept all the dividends, you are down about 3% on the recovery phase with YMag versus the Q. So, these are numbers. It depends on how you feel about them. For me, I don't think that's a bad recovery at all. Pretty close to the Qs as far as going back up on the recovery phase. Let's look at YMax on the recovery phase. YMax outperformed the Qs on the way up if you reinvested all the dividends. If you did not reinvest the dividends and you decided to keep every single dividend from YMax during the last number of months during the recovery phase, you're barely down on the Qs on the recovery phase. Not bad at all. I mean, and you don't have to sell your shares. If you're a YMax, if you kept all the dividends and to just be barely down like that, it's pretty incredible. Now we're going to go look at Amsy, and again, we're going to just go back here to this portion of the video. We're looking at this point of Amazon. Again, that's the biggest dip we had for Amazon for the past year, so that's the only data we have to go off of. And again, it was just like 3 weeks. That's all we got for these dips. If you're not buying these dips, or you haven't been buying the dips for the last 2 years, I don't know what to tell you. So on the way down, Amsy, as you can see here, outperformed Amazon, right? Down 16% versus 19%. So that's pretty nice, on the way down. And then on the way up, we can see here that this is where the separation, again, just like we saw with Tasley, the separation, albeit not as big as Tasley and Tesla, because Amazon isn't nearly as volatile as Amazon. So not as many calls got blown through, although some did for Amsy, but not nearly to the level that Tasley did. And you can see here in the numbers that's the reason why it was so close on the recovery phase, right? Total return, if you reinvested all the dividends in Amsy, 24% on the recovery phase, 33%. And if you decided to keep all the dividends instead of selling shares on Amazon to get monthly income, you're up 22% versus Amazon's 33%. So, it's really up to you and what you think will happen. But I think what we're seeing here with Tasley, although not to this level on everything, because Tesla moves so fast to the upside and downside, I think we're going to see it's going to look something like this when the markets go back up after a prolonged down period, where the Yieldmax funds will lag the underlying, and in this case quite significantly. But you saw on Amazon, it wasn't an AMZ, it wasn't nearly as big a gap as this. And then I think this is what we're going to see if we get like a 6, 7, 8 month down period. I think you're going to see your Yieldmax funds outperforming, like we saw already with Amsy. Even though it was only 3 week period of downturn, it outperformed Amazon. And then you can see here with Tasley how it outperformed Tesla on the way down. I hope this video answers some questions for you guys on what may happen during a prolonged down period for Yieldmax funds. I'm not going to go through every Yieldmax fund out there. I just picked 4 that I thought were pretty popular and went with those. Hope you enjoyed it. This is Mike, Tactical Stock Scalper, out.